Hello everyone, welcome to accountancy class. I am Divya, lecturer in commerce, GSIPU College, Mysuru. Today in this session, let us discuss about profit and loss account from chapter 9, session 3, that is financial statement 1. Profit and loss account, it is an income statement prepared with the items of indirect expenses, losses, incomes and gains with a view to ascertain the amount of net profit, net loss of the business is known as profit and loss account. First one, to find out the net profit and net loss of the business. Second one is to know the indirect expenses, and third one to facilitate the comparison of the results of the current year with the previous year. The profit and loss account is required. So first you should write the heading profit and loss account, debit as well as credit, then particulars. This is in this column we are recording all the expenses. One amount column is required. In this particular column we are recording revenues and the next one is amount column. In the previous class we learned about trading account, and in the balance arrived in the trading account may be gross profit or gross loss. If it is gross profit means the balance it is arrived on the debit side. If gross loss means the balance arrived on the credit side. This gross profit balance carried down to profit and loss account means this profit is recorded on the profit and loss account credit side by trading account or gross profit balance brought down. ಪ್ರೀವಿಯಸ್ ಕ್ಲಾಸಲ್ಲಿ ಟ್ರೇಡಿಂಗ್ ಅಕೌಂಟಲ್ಲಿ ಬ್ಯಾಲೆನ್ಸ್ ಡೆಬಿಟ್ ಸೈಡ್ ಬಂದಿದ್ದರೆ ನಾವು ಅದನ್ನ ಗ್ರಾಸ್ ಪ್ರಾಫಿಟ್ ಅಂತ ಹೇಳಿ ಬರ್ದಿದ್ವಿ. ಕ್ರೆಡಿಟ್ ಸೈಡ್ ಬ್ಯಾಲೆನ್ಸ್ ಬಂದಿದ್ದರೆ ಅದನ್ನ ಗ್ರಾಸ್ ಲಾಸ್ ಅಂತ ಬರ್ದಿದ್ವಿ. ಟ್ರೇಡಿಂಗ್ ಅಕೌಂಟ್ ಡೆಬಿಟ್ ಸೈಡಲ್ಲಿ ಇರ್ತಕ್ಕಂಥ ಗ್ರಾಸ್ ಪ್ರಾಫಿಟ್ನ ಪ್ರಾಫಿಟ್ ಆ್ಯಂಡ್ ಲಾಸ್ ಅಕೌಂಟ್ಗೆ ಕ್ಯಾರಿ ಡೌನ್ ಮಾಡಬೇಕಂದ್ರೆ ಅದು ಪ್ರಾಫಿಟ್ ಆ್ಯಂಡ್ ಲಾಸ್ ಅಕೌಂಟ್ ಕ್ರೆಡಿಟ್ ಸೈಡಲ್ಲಿ ಬರೀಬೇಕು. ಹಾಗೆ ಗ್ರಾಸ್ ಲಾಸ್ ಬಂದಿದ್ದರೆ ಪ್ರಾಫಿಟ್ ಆ್ಯಂಡ್ ಲಾಸ್ ಅಕೌಂಟ್ ಡೆಬಿಟ್ ಸೈಡಲ್ಲಿ ಟು trading account or gross loss balance brought down. After this one we have to record all the indirect expenses on the debit side of the profit and loss account. To indirect expenses. Indirect expenses may be office and administrative expenses, selling and distribution expenses, maintenance expenses, then financial expenses. So office and administrative expenses includes salary, rent, rate and taxes, postage, general expenses, audit fee, bank charges, insurance, telephone bill, then office lighting and eating. These are all comes under the office and administrative expenses. So that amount you should record in the amount column. Next one, selling and distribution expenses includes advertisement expenses, commission, bad debts, traveling expenses and carriage outwards. This all comes under the selling and distribution expenses. Next one, next one is maintenance expenses. Here depreciation and repairs. This all comes under maintenance expenses. Next one, financial expenses means interest on loan taken, interest on capital, discount allowed, these are recorded under the financial expenses. So these office administration expenses, selling and distribution, maintenance and financial expenses comes under indirect expenses. Then indirect income, if any indirect income is there, then it is recorded on the credit side of the profit and loss account. So what are the indirect incomes? Rent received, commission received or commission earned, discount received, bad debts recovered, interest received on the fixed deposit, that all recorded under the indirect incomes. When the credit side amount is more than the debit side, write the same total on the debit side. The difference, so whatever the difference arrived, that difference is known as net profit. This profit is transferred to capital account. If debit side amount is more than the credit side, then first write the total amount on the debit side, same total will be recorded on the credit side. The difference amount is known as net loss. This loss transferred to capital account. So this is the format of profit and loss account. If we know what all the items comes under profit and loss account, very easy to prepare the profit and loss account and find the net profit as well as net loss. Bad debts, it is recorded on the debit side of the profit and loss account. Then what is bad debts? The amount that the firm has not been able to receive, it is regarded as a loss and it is recorded on the debit side of profit and loss account. Discount allowed and discount received. Then what is discount? It is the deduction in the price of the goods sold. Discount allowed means when the seller of the goods grants a payment discount to a buyer, that means to the customer, then it is called as discount allowed. Discount received means that is reverse situation where the buyer of the goods is granted discount by the seller, that is that discount is given by the supplier to the business, whereas discount allowed, that the business gives the discount to its customer, that is known as discount allowed. From the following particulars, prepare profit and loss account for the year ending 31st March 2016. Gross profit 1,20,000, rent and taxes 8,000, printing, stationery and postage 6, office lighting 1,000, general expenses 600, salaries 20,000, insurance premium 2,000, advertisement 1,400, depreciation on fixed assets 1,000, discount received 200. So gross profit is given in the question. First bring the gross profit to profit and loss account. by gross profit balance brought down 1,20,000. Next, rent and tax 8,000 to rent and tax 8,000 to printing stationery and postage 600. Next one, to office lighting, this is also indirect expenses 1,000. To general expenses 600. Next one, to salaries 20,000. Next one, to insurance premium 2,000. Next one, to advertisement 1,400. Next one, to depreciation on fixed assets 1,000. Depreciation means decrease in the value of the asset. Discount received word is there, it is an income record on the credit side by discount received 200 rupees. So first find which amount column is more. Here credit side is 1,20,200. Write the same amount on the debit column 1,20,200. From 1,20,200 deduct all these amount, the balance is 85,600. This is net profit transferred to capital account. So net profit transferred to capital. When debit amount is more than the credit side, then you will get net loss. This is called debit balance. When credit side amount is more than the debit side, then we'll get net profit. This is credit balance. Next problem, prepare a profit and loss account for the year ending 31st-3/2016 of Srinivas. From the following information, prepare a profit and loss account for the year ending March 31st, 2017. Gross profit 60,000, rent 5,000, salary 15,000, commission paid 7,000, interest on loan 5,000, advertising 4,000, discount received 3,000, printing and stationery 2,000, legal charges 5,000, bad debts 1,000, depreciation 2,000, interest received 4,000 and loss by fire 3,000. So first one is gross profit is there 60,000. So gross profit is recorded on the credit side by gross profit 60,000. Next, rent 5,000 to rent 5,000 to salary 15,000. Commission paid, it is an expense to commission paid 7,000. Interest on loan means it should be recorded on the debit side. Interest On investment means it is recorded on the credit side. ನಾವು ತಗೊಂಡಿರುವಂತಹ ಲೋನ್ಗೆ ಇಂಟ್ರೆಸ್ಟನ್ನು ಪೇ ಮಾಡಿರೋದು ಎಕ್ಸ್ಪೆನ್ಸಸ್. ನಾವು ಬ್ಯಾಂಕಲ್ಲಿ ಇಟ್ಟಿರ್ತಕ್ಕಂತಹ ಡೆಪಾಸಿಟ್ಗೆ ಇಂಟ್ರೆಸ್ಟ್ ಬಂದರೆ ಅದು ನಮಗೆ ಇನ್ಕಮ್ ಆಗಿರುತ್ತೆ. ಸೊ ಟು ಇಂಟ್ರೆಸ್ಟ್ ಆನ್ loan 5,000. Next one, to advertising 4,000. Discount received means it is an income by discount received 3,000. Next one, to printing and stationery 2,000. To legal charges 5,000. Next, to bad debts 1,000. To depreciation 2,000. Next one, interest received is there. It is an income by interest received 4,000. Next one, to loss by fire 3,000. It is recorded on the debit side of the profit and loss account. So if any expenses and losses is there, it is recorded on the debit side. If revenues and gains is there, then it is recorded on the credit side of the profit and loss account. So first you total both the amount column. Here credit side is more, so 67,000. So record the same total on the debit side, 67,000. Find the difference. 67,000 minus all these amount, difference amount is 18,000. This is net profit. This net profit transferred to capital account. So all the expenses and losses is recorded on the debit side of the profit and loss account, and all the incomes and gains are recorded on the credit side of the profit and loss account. So the received word is there, means it is a income. Paid means commission, paid word is there, means it is recorded on the debit side of the profit and loss account. So when you balance, if the balance is arrived on the debit side, means it is a net profit. If the balance arrived on the credit side, means it is a net loss. So if you are thorough with the format of profit and loss account, it is very easy to score 6 marks in the examination. So I hope today's session was useful to you all. Thank you.